Good morning, everybody. This is Rick Geiler from SilverSide Insurance here in sunny Scottsdale, Arizona. And I have with me today Michael Frahm from the Sagicor home office. He is the product manager at Sagicor, and he has a list of credentials that I think were too long to add to the invite screen. But Michael is going to touch on a few things here pertaining to the periodic premium products that Sagicor is really taking the lead in developing in the market today, the 10, 15, 20-year level term, and their no lapse UL. There's a whole life you might get involved with a little bit. But I'm going to let him get started with his presentation, and then he is going to allow me to chime in here in a little bit and add a little bit of color on a couple of the other products I mentioned in the invite. But let's go ahead and get started. Michael, are you there?
I am right here. And
Okay.
I'd just like to say, Rick Geiler has been a longtime friend of Sagicor. We've done a lot of business with Rick, and I can vouch for him. He is just a great, honest guy and really, really knowledgeable. He's my go-to guy on a lot of things. I'm also the chair of the Product Development Committee, and we like to bounce ideas off the field for us. Rick is one of the guys on the top of my list I always go ahead and get his insights on. Let me give you an idea of what Sagicor is about on it. And like I mentioned, we're going to cover the fixed index single premium whole life, which is very unique in the marketplace. We're actually the only fixed index single premium whole life carrier out there. So that's a unique product that you can use the word guarantee around. And then also our 10, 15, 20-year level term and our no lapse universal life. Rick also mentioned about the whole life. The whole life process is going to be almost identical to our no lapse UL. So, but first, just give me an idea about Sagicor. Now, here's the thing about Sagicor. A lot of people may not know about Sagicor, but we've been around for a long time. Let me just go ahead and just hit it methodically here for you. Our vision statement: to be a great company committed to enhance the lives of people in the communities in which we operate. Now, the reason why I put the vision statement is if you see Sagicor, you're going to see we do a lot of charitable activities. You catch that a lot. It's just part of what we are. So more so than I think other life insurance companies. We help out folks in the community. When I get to our history on there, we've been doing this a long time in 22 countries and have a history going way back just helping out communities and such. Our name actually came about, it's two words, sage meaning wise, and core meaning harder judgment, and that's where you get the name Sagicor from. And our corporate tagline is wise financial thinking for life. In doing business with Sagicor, we have the producer portal where you can always pick up forms, status reports, and training modules, but we also have a dedicated producer resource center. These are trained experts that are there for you that you can contact by email, by phone, and these real life people that will actually help you out. You also have full access to our underwriters, and we offer express issue, simplified issue, and fully underwritten products. We have electronic submission for our no lapse UL and term products. We're looking to add that next year for the remainder of our products. And we also have paper applications if you prefer that. And commissions are paid on a daily basis for settled business. Now, just jumping into that fixed index single premium whole life product, like I mentioned, that one's unique and different. This product is, you can use the words guarantee, unlike an indexed UL. Issue ages 45 to 85. You can see minimum premium is only $5,000. We like to say there's no maximum premium on this. But anything that's greater than, it should be greater than $500,000 requires home office approval. We have two risk classes, standard non-tobacco and standard tobacco. It's a non-med point of sale approval. Now, this is no medical underwriting on here, no pyramid, I should say, no APS, no EKG, and you get a decision right there at that point of sale. Now, a nice feature on this, there's a 10% premium bonus. Somebody puts in $100,000, they're going to see right on their illustration that it's going to say $110,000. So they have a jump start right there. And we also have a guaranteed return of premium on this from day one. So on the illustration, Rick's going to pull one up later on. It's going to show right on there. If they put $100,000 in there, they're going to show $110,000 that's invested, and then they're going to show $100,000 on that surrender charge line right on there. 10-year surrender schedule. You're going to see that this life product mimics annuity, so it makes it a quick and easy transition for anybody who currently has an annuity, wants it put into here, or has, or for some reason they don't qualify, say for example for life insurance. It's always an easy transition back to annuity too. Partial withdrawals are allowed anytime. This is a MEC because it's single premium. And there is an accelerated death benefit rider for terminal condition and chronic illness. I'm going to hit that in a moment. Now with this fixed index single premium whole life, here's the thing. We have 3 different strategies. The first one is the declared rate strategy, better known as a fixed account. And this is done on an annual basis. Minimum guaranteed interest rate of 2%. Currently it's at 4%. And it can change on there. Many of you know that we're in a low interest rate environment, interest rates go up in the future. Well, this can also on a yearly basis for you, for your client. There's also the standard S&P 500 index on this too. And the Global Advantage strategy. Now this one is unique. This is a global look-back advantage. It has the Russell 2000 index, which are small cap stocks, the Euro stock index, and the Hang Seng, which is a Hong Kong index. Now that one uses a participation rate. The S&P 500 has a cap. Now to give you an idea, a little bit more information on that, that global look-back advantage. This is what I like to say that, yeah, everybody and their uncle has that S&P 500. Diversify globally. Put into this one, where you're actually going to get small company stocks, small mid-size with that Russell 2000, but you're going to get some international flavor on this too. The Euro stock and also the Hang Seng index. Now the big twist on this, it's not just a blended account that you're throwing in there and you're hoping for something. Look at the second paragraph. We take 60% of the best performing index plus 40% of the second best performing index, and we disregard the third best performing index. And again, they can never lose their money, go below that 0% floor on there. So they're actually getting the best of the best, and that's where the look back comes on top of it. So this is a huge advantage, something that you have that's over anybody that's with an investment advisor. If they put somebody in the same type, well, they won't be able to go ahead and cherry pick that 60-40 mix on there looking back over the last year. Speaking of that, here's just gives you an idea of how that worked just for the last 10 years also. So you can see some of these, I mean, beautiful. You have some 10% returns. And when the market did bad, well, you're not going to lose anything either. Oh, let me go back one. Here's a huge benefit, and I know Rick's going to talk about this a little bit more, but with our accelerated death benefit rider, we like to say this is one of the richest ones that we know out there for terminal condition and for chronic illness. And you can see that it's it pays the lesser of $250,000, but it keeps a $25,000 death benefit there for your client. So what I'm going to do is turn this over to Rick at this time and have him go in a little more detail and show you some more information on it.
Okay, good. Thanks for that, and hey, thanks for the nice introduction there at the beginning, Michael. You're too kind, but here we go. As he said, this is going to be your basic illustration for the fixed index single premium whole life. Just ran this morning. Female, standard, 65, non-tobacco. 100,000 goes in. Here you can allocate between whichever of the 3 strategies Michael just outlined. Here on this one, as you can see, historically, the return on the global basket has been slightly better, so this illustrates better, so I like to show it. If you want to maybe allocate between the S&P strategy and the basket, whatever your personal preference is. But for today, I did this. As we said, 10% immediate premium bonus. So your $100,000 shows $110,000 cash going in. Obviously, there's a 10-year surrender schedule, and we're overlapping about 6 or 7 different actuarial formulas here, but the key thing to keep in mind here is this cash surrender column. Never be less than the $100,000 you put in. And this is on the guaranteed side we're looking at the moment. This is assuming that your global strategy or your S&P or whatever you use is not performing at all for you. You can see over the course of time your cash value, because of the nature of the whole life chassis it's on, your cash value is actually guaranteed to increase over time. Your death benefit, with no crediting whatsoever out of the global or the S&P, your death benefit on the guaranteed side is eventually going to peg down to the face amount, but you've still almost doubled your client's money here for death or this monthly chronic illness, which is what I'm going to get into a little bit more in a second here. That's a cash benefit. The formula basically is they take this death benefit amount, they subtract $25,000, which will be paid at death. So that doesn't disappear if you trigger the chronic illness benefit, but it'll stay in force and be paid at death, $25,000. The rest of it will be paid out 3% per month as a cash monthly benefit. I'm going to show you the claim form you use to trigger this, because when you talk to my office, when you talk to me, we say this is the richest rider in the class. And I'm gonna prove it to you, and if anybody has something else they think will rival this, I'd like to see it. But there's a lot of single premium whole lives out there that have some sort of illness acceleration. But there's not going to be one that's going to compete with this as far as the ease of trigger. That it's a cash benefit. You're not showing nursing home receipts. You're not showing billed services. You spend the $48.89 per month or whatever yours happens to be on whatever you feel you need to spend that on. You won't have to justify what happens to the cash. Now, over here on the current side, this is given the assumption that your basket index is performing the way it has historically, and as you can see, over time, that's really going to drive the values higher. And I could pen down a couple more pages here if we'd like and see by the time this healthy 65-year-old is likely to pass on, maybe in her 90s or beyond, that death benefit can really grow by then. And then the illness benefit will be pegged to the maximum, 75, 76, which is $250,000 paid out over 33 months is where that number is coming from. But let me change quickly here, hopefully. When we say this is a cash benefit and an easy trigger, I'm going to show you this is the actual claim form. If you want to know, okay, how do I get that $4,800 a month? Well, your client fills out page 1 here, which is basic information, and they check the 2 of the 6 ADLs that they actually need substantial assistance performing, and they sign it. Then they go to their doctor, and this is it. This is the entire claim form. The doctor fills out basic information, the date of exam, basic diagnosis, checks off the 2 of 6 ADLs that the insured is having difficulty with, signs it, it goes into the claims department, and that cash benefit is triggered. The other 2 pages, you'll see this is page 204. The other 2 pages are just state disclaimers. So that's essentially a 1-page claim form that you're responsible for to trigger that cash benefit. So again, if anybody has a single premium whole life product that they feel has a stronger rider, please call me, and my number will be posted clearly at the end of the webinar if you don't already know it, and tell me what that is. Now, before I give it back to Michael, I also promised a CD alternative for $100,000 on the tagline for the webinar. Now, most of you guys who are on today are aware of this product. A lot of you have actually used it. This is the 9-year bonus annuity from Sagicor. And I wanted to mention it today, even though we don't talk about it quite as much as we used to. This became a really, really hot seller for Sagicor. And the basis of it issues to 85, immediate 5% premium bonus. And the key feature to this includes it's got a 2% overall guarantee. And without taking too much away from the remaining time here, what that does is that drives this guaranteed minimum surrender value column. And as you can see, after year 2, this policy, $100,000, is guaranteed on a walkaway basis to be worth $101,359. Now, the thing to mention, we don't talk about this quite as much as we used to. This product really blew up for Sagicor. They got, I think they doubled or tripled their budget for the year by midway through the year, although I'm not probably the one to speak to that, and Michael's probably not prepared to either. But they wanted to leave the product on the market for the mid-market, for the average Joe out there. So premium now is capped in this product, maximum $100,000. But with CD rates still hovering around 1%, with the guarantees, the upside, this is the key feature. So if you need an illustration for your client so you can show them this is actually on a guaranteed basis going to beat any kind of CD or bond or guaranteed instrument, we can run this for you and give you the lowdown. And with that, before I take too much away from what Michael's going to get into, are you ready to go ahead and continue with the term and the UL?
I'm ready to go. One thing I mentioned though with the annuity is that when you mentioned blow up on there, it was, I like to say it was an avalanche. We got so much, so many people that wanted to go ahead and sell that product on there that yes, we did have to cap it out just so we could keep it going for everybody in there to go ahead and offer at $100,000. But think of it this way: if you're sitting down with Hank and Mabel around the kitchen table, well, $100,000 underneath Hank's name and $100,000 underneath Mabel's name. So you just grab $200,000 and put it into this product for them, that annuity. That's a nice thing. Mm-hmm. One of the things I was going to mention is Sagicor. We kind of redid the slide on here. I expected to pop up on our history. Sagicor has been around since 1840, and we're in 22 countries and started out in the Bahamas. And that's where I was mentioning that they did all that help for those Caribbean countries. And then in 2005, they bought American Founders Life and came to the U.S. So, and we've been doing a lot of things on here, great products. As I mentioned, I'm in the product development committee. We're looking to create products that actually help out your clients on there. A little bit different twist, not the profit motive, but just more so that it's designed to help out individuals. You're going to catch this on when we mention this. And just like Rick stated with the annuity, and then I hit some of the high points along with them on that fixed index single premium whole life. It is unique in that respect. And he mentioned if you find another company that's out there that has it, let him know. Well, I'm also in charge of the market research department here. Looking out there, I can tell you we have found nothing that is comparable to what Sagicor has. Now, let me just go now and start talking about our term insurance. We have a 10, 15, 20-year term that just rolled out this year in May. And on this one, I'm going to break it up in two different segments, first being simplified issue and then fully underwritten. The issue ages on our simplified issue, and the simplified issue is also point of sale. So at the end of the telephone interview, you're going to get an answer on there if it's been preferred, standard, rated, or declined. Now, issue ages on here you can see are for 10, 15, and our non-tobacco 20-year term are 18 to 65. Tobacco 20-year term, 18 to 55. Face amounts for simplified issue for ages 18 to 65 are $50,000 to $399,999. 5 risk classes that we have. Again, this is simplified issue. It's pretty unique that you have preferred and standard, where most companies only offer a rated. And then tobacco, preferred, and standard. With the simplified issue, it just requires a brief telephone interview. Underwriting decision, as I mentioned, is going to be offered right at the completion of the interview. You can do this as paper or e-application. There's voice signature capability during the telephone interview. You don't have to do a face-to-face interview with this either. This can also be done just strictly by email, and the telephone interview. It's only 7 yes or no health questions, and again, no bodily fluids, pyramid, or APS required on this. Now, with the fully underwritten, a little bit different. Now, you see on here the 10-year term except male standard tobacco for ages 18 to 75. The reason why we pulled out that male standard tobacco, we wanted to go ahead and give you the best premiums at the best ages that we could. So that's why you see this is a little bit different than other companies. Instead of bunching together and taking away part of the sizzle. Male standard tobacco 10-year, 18 to 65. 15-year term, 18 to 70. Non-tobacco 20-year term, 18 to 65. And tobacco 20-year term, 18 to 55. Now, face amounts for this fully underwritten product, ages 18 to 65, is $400,000 or more. Remember, the simplified issue, 18 to 65, was $50,000 to $399,999. And for anyone ages 66 to 75, then it is fully underwritten beginning at $50,000. Our underwriting available for this product, both non-tobacco and tobacco, are preferred, standard, and also rated all the way from Table 1 all the way through to Table 8. Now, both of these term products have an accelerated benefit rider on here. Now, this is a little bit, in my opinion, unique for a term product, that it offers an accelerated death benefit rider for terminal condition or nursing home confinement of the lesser of 50% of the face amount or $300,000. It also has additional optional, that's a huge benefit on there. I'm going to hit another one in a moment, but it also has optional riders of accidental death, child's term rider for fully underwritten applications, and waiver of premium. We have guaranteed level premiums for the entire term. Some companies just have for the first 5 years, and then it can click up on them. This stays with it for either the 10, 15, or 20. Level death benefit to age 95. Convertible to a permanent product until age 70. And here's the other significant benefit that our term insurance has, I want to mention, is the term conversion credits program. This is in years 2 through 5. And for example, in year 2, you can see 100% of the previous 12 months based annualized term insurance premiums. What that means is just not with any riders on it, but just the base premiums that they paid for the last 12 months were actually jumpstart into a new permanent policy upon conversion. So they have that 1 year's worth of potential premiums that can go up front to pay the premiums or go right into the cash value, and they will immediately have cash value there for them. You can see that in years 3 it's 80%, year 4 it's 60, year 5 it's 40. But that is another significant benefit. Now I'd like to talk about our no lapse universal life. Our whole life product is very, very similar to this too. But this is a popular favorite that we're catching, and it's just this is another real growth aspect that we've found out there. We have 3 different categories. We have express issue, and that goes from $5,000 to $24,999, and that's issue ages 18 to 75. There's only 8 health questions. On our express issue, there's no telephone interview required, and again, no pyramid, no APS, no bodily fluids. We only have 2 risk classes, standard non-tobacco and standard tobacco. Now, if you click up to $25,000, and you can see our simplified issue, you may get a better premium for your client, but you just have to have a telephone interview with that. Now, that $25,000 goes up to just shy of $250,000 at $249,999, and that's issue age 18 to 65, 7 health questions. I mentioned that brief telephone interview. That's typically about 15 minutes only. And again, no pyramid, no APS, no bodily fluids. You're going to get an answer at the end of that interview. And there's 5 risk classes with our simplified issue. Again, something pretty unique on here. Preferred non-tobacco, standard non-tobacco, rated non-tobacco, and then tobacco at preferred and standard. And then we also have the fully underwritten, $25,000 to $249,999 for issue ages 66 to 85, and anything that's over the simplified issue amount, which is $250,000 and higher, is fully underwritten, ages 18 to 85. Again, preferred, standard, non-tobacco, preferred, standard, tobacco with underwriting up to table 8 on there. I also like to mention we do have juvenile on here. Juvenile is express issue. There's no telephone interview. 15 days to 17 years old. 5,000 to 999,000 risk class is just the standard juvenile for you. Now with the no lapse UL, you can see that we also have that accelerated death benefit rider. This is another beautiful option. It pays out the lesser of $25,000 or $400,000 on there. Terminal condition, chronic illness also, and again optional riders, accidental death rider, children's term rider for fully underwritten applications, and waiver of premium. I'd like to go ahead and give you some, I also like to throw out there some sales ideas for you. And with the no lapse UL, you can take a lump sum, and for example, we're taking Jane. She's a 65-year-old female, non-tobacco, standard, and she has $75,000 that was invested in the stock market, and she wanted to leave it for her kids, her church or charity and such. She had a loss, which many Americans did, and then it diminished the value to $50,000. She can take that $50,000 on here. She consults her tax advisor. That loss between the 75 and the 50 on there, that $25,000 capital loss, she may be able to write it off on her taxes. Then she can take that remaining $50,000 that she has, place it in the Sagicor no lapse universal life policy, and more than triple her death benefit on there, with her intention that she want to leave it to her designated beneficiaries on there. Again, tax-free. Another sales concept on here, someone has $50,000 earmarked to be left to children, church, or charity. Well, instead of just having that money sit idle in the bank account, they can just take $17,500, place it into a Sagicor no lapse UL policy. It turns into $50,277. That's going to pass tax-free to the beneficiaries. That's what I like to say is the miracle of pen and ink. And that remains $32,500 that she can now use for her own purposes, that she can just use while she's alive, because she already met that designation for children, church, or charity through her life insurance policy. We do have a number of producers that actually go into marketplace for small death benefits. Some call for cremation, funeral, final expenses, and such. Here's a huge benefit. We're the only one that I know that uses simplified issue, preferred, standard, and rated at this $25,000 on there with point-of-sale approval, where other companies use whole life. So I put some of the competitors out there just to give you a rough idea. And again, if you look at the rated alone, where all these companies, from what we've seen, are all in a table 4 rating, if you compare apples to apples, they sure beat them out. This is a no lapse guaranteed UL, guaranteed to age 120. So whole life has guarantees. Well, so does this. But you're not pigeonholing everybody, putting your healthy clients into one of these whole life products. They also can come through as standard or preferred in that respect too. And the other thing I want to mention, with $25,000, you do also have the accelerated death benefit rider that they have. Now, one of the scenarios that I'm leading up to is just to sit down with Hank and Mabel across the kitchen table, and you bring up Social Security. And we have this worksheet that Rick will be able to provide called What Do You Have to Lose? So most seniors know that upon the death of the first spouse that they're going to lose the lower of the 2 Social Security amounts. They may also lose a monthly pension, or it may be reduced by, say, 50% with federal employees. And also, they take the money out of the bank to cover the funeral expenses. Say it's $10,000. Well, they just lost any interest income that was derived off that $10,000, and they lost that $10,000 as an emergency fund. So this is where you can step in. And this is just part of the actual worksheet itself. And you can see that it's math. So the next thing is numbers don't lie. They just place, you just put in here what they're currently receiving for Social Security, what it would be if it's just the wife only, if she's a surviving spouse, or husband only, if they have any pension amounts, interest income. This is always good to know because they may be drawing interest off an annuity. Well, you could possibly do a 1035 exchange with that. Any other income on there, maybe they have some rental property that they're looking at selling. When they sell that rental property, what are they going to do with it? Well, you can invest it also. And then the monthly loss of income. On the flip side of this sheet, it actually has a quick and easy calculator on there. You just plug in the numbers, and it comes up with the actual amount that they need to have for life insurance coverage to cover this lost income. They have no problem understanding the concept. It's all in numbers, and you're going to help somebody that they just have never had anybody go ahead and guide them with this to show the hard numbers in that respect. And again, these are all things that Rick has in that regard so that he can provide to you. Speaking of Rick, I'm going to turn this back over to you then. And if there's any questions on here, I'm going to stay here just to go ahead and help out and answer any questions that there may be. Thank you.
Oh, okay. Hey, thanks a lot, Michael. That was very useful. Yeah, there's a few questions. As usual, some of them are pertaining to state availability. Generally speaking here, what do we have, Michael? We have 45 states that most of these products are available in?
Yes, that one slide that I mentioned, it didn't talk about Sagicor being around since 1840. It also states on there the number of states that we're also in. Let me give you a quick idea. I'm going to tell you what states we currently are not in. That make it a little bit easier. We're not in New York, Maine, New Hampshire, Connecticut, Vermont, or Alaska, and the term product is not available in the state of Washington yet at this time.
Okay, and we got some questions. And Washington we're looking at for maybe at some point in the not too distant future?
Yeah, we're looking at that. We're going to do some filing next year to even improve the product more so then it would be in 2014 is what we foresee.
Okay, good. And then I have a number of questions. We did run over 2 or 3 different products here, or 2 or 3 different mainline products. The single premium life, the same illustration I was showing, yes, we can get you those specific to your client. Go ahead and give us a buzz. As soon as you get your contracting with Sagicor, looking at the attendee list here, a good percentage of you folks already do. You'll have access to the illustrator. You'll be able to run the full illustration for the single premium life. The annuity I showed is illustratable, specific to your client. The quotes for the term and the no lapse are available on there as well. It's pretty user-friendly. All the forms, all the materials you'll need to go out and write are there. In the meantime, feel free to call my office, 480-998-1286. We can help you with any of that. I'm seeing here, what else? I'm trying to read a couple more questions here without, I want to get everybody out of here before too long. Yes, we're quoting that the rates and features on the term are very competitive. And I'll go ahead and see if I can give everybody an idea what I mean by that. I did run a CompuLife. I don't know. There's a few platforms out there for quoting term and no lapse. I use CompuLife. There's iPipeline. There's some others. But just for example here, I ran this morning just off the cuff. Female, 35, 150,000. This is 20-year level term. And as you can see, the Sagicor quote is right in there in the mix with all the, the household names that you think of with term a lot. But the key issue here is the Sagicor is simplified issue. So
and also has that accelerated death benefit rider of 50% up to 300,000, and that term conversion program on there that you can actually take your last 12 months of premiums and apply towards the a permanent policy.
Right. Yep. So rates and feature-wise, this is very competitive, and it's on a simplified chassis where most of these other carriers here, I'll even pan down a little bit. I can stop pop-ups. There's a few carriers. Let's see. I think maybe when you get down to the American National here, that might be on a simplified issue, and I know there's a couple other niche companies that work the simplified arena of underwriting. But what you're seeing with Sagicor is you're not giving up rates and features for that simplified issue. And with that, I see a few more questions on here, but what I may do is just invite you to call in one-on-one, and we'll handle those. Some of those are pretty specific. The whole staff here can help you, 480-998-1286. And thanks everybody for attending today. And Michael, as always, thank you so much for the information there from the home office.